Test.
Yeah.
Test. Okay, it's working. Hello everyone, this is Gökçen Müftüoğlu. I'm the founder of AdvisorsRoom, which is an advisory company. I'm a financial advisor specialized in M&A and deal advisory, corporate finance. I have also a TV show in Bloomberg HD. I'm producing and hosting it. And also, before we start, let's go around the table. So, could you please briefly explain yourself, Nick and Burak?
Thanks for having me. My name's Nick Coombs. I'm the Managing Director of BitGo MENA, which is our Dubai-based VARA-regulated entity. BitGo, for those that don't know, is one of the world's largest infrastructure providers. We've been in this business for 13 years now. Most well known as a custodian, but in more recent times, we've broadened our product suite and now offer a full stack, including trading, staking, tokenization, stablecoin services, and also settlement services as well.
Thank you so much. And Burak?
Hi, thank you very much. This is Burak Basara. I'm the General Manager of TRBNS, regulated exchange in Turkey. We are listed in the SPK website. We are mostly doing B2B now, and we will be expanding our operations along with the others as soon as the custodians are coming into place.
So, may I start with Nick? Nick, my first question is, so what are the three most important factors institutions look for when choosing a digital asset custodian today?
Yeah, so certainly from a BitGo perspective, it generally starts with regulation. Institutions, many of them have to work with regulated custodians. So that's a very important factor. Where is that custodian regulated? Is that license, a blue chip license from a very solid jurisdiction? Alongside that, if there's an on-prem type solution, which is obviously fairly prevalent in the Turkish market, does that solution fit the local regulatory requirements? The second sort of major point that comes up a lot in conversations we have is insurance. Is the custodian insured? Many custodians offer very high levels of security, various forms of cryptography. They might have a very much a battle-tested solution, but we're in the day and age of AI. There's a lot of hackers out there. And insurance is that sort of added or secondary layer of protection for customers. So from BitGo's standpoint, we offer a $250 million insurance policy that covers any assets that are held in our cold wallets. And that's certainly something a lot of our customers appreciate. And the third thing is really around platform features. What sort of assets does that custodian support? Is it a broader range of assets? What blockchains do they support? How customizable is the UI? Is the reporting robust enough? Is it on an institutional level that they can show their auditors? Does the platform hold SOC 1 and SOC 2 reports? Is it audited by a top 5 auditing firm? And in addition to that, how easy it is to use the platform itself. Obviously, our customers are using it on a daily basis, so the UI is very important as well. And alongside that, not only the platform and the custody pieces, what other products does that custodian offer? I was in a meeting yesterday. One of the main blockers or issues they had was that they were working with multiple different providers for different services. What we've tried to do at BitGo is bring all of those services into one platform. So not only do we offer the custodial wallets, which are regulated and secure, but alongside that, we offer the ability for clients to trade their assets. So they can use OTC services or online trading engines. They can stake those assets directly from the safety of cold wallets. And they can also use our internal settlement rails that we've created for our customers.
Just one question. So you said the customers can serve different products to their clients. So which are the must one? It's based on the regulatory or any other?
Look, I think most customers come to us to start with custody. They're looking for a secure solution to store their assets. In our case, we offer a regulated solution. There's other providers here that offer a kind of a technology solution that clients can manage in-house. Each of those are more appealing to certain client use cases and their preferences and their internal policies. But starts with custody. Obviously, in this day and age, a lot of people are looking to make their assets go to work so they can stake those assets using our infrastructure. And I would say trading is also another feature that's very important for our customers now as well.
Thank you so much. Burak, we are recently talking more often like token and tokenization. So I would like to ask you, from an investor's perspective, what real problem does tokenization solve?
Actually, to begin with, I'm coming from the traditional finance. I've been working for banks for many years, then switched to the other side of the table, but always the traditional finance. Now, as a guy who has joined the club in the recent years, I always compare things with the banking. So, for the banking, what we have done for over 50 years on-chain has been done in a couple of years, just say 5 years. So, to begin with, we only do the things that we do with the banking. It's just plumbing, rebuilt, I can say. Just to give you an example, especially the stable coin helps us to understand that everything could be fast, cheaper, instant, and 7/24. So basically, tokenization will give us that chance to have everything ready, steady, and instantly.
So this is the main difference from the traditional finance.
Yes.
We can say maybe the fastness and.
But it's not only money, it's not only time. It's the combination of all those aspects. Because, like we talk about banking, we have those papers, secured papers. Just you record them, you custody them, etc. It took weeks to just make the recording.
Bureaucracy we have in that
now
process.
it's very responsive. You do it immediately, and it's valid for all the time. And the other thing I can say is last week, as we have the Eid holiday, the banks were closed, but crypto is not.
Okay, it's good. Nice to
Crypto
hear
never stops.
Yeah. So next question for you, Nick. What do you think? It's important question for me as well. Seems as Burak, I am a very traditional finance person. Trust is very important for us. What's the biggest trust barrier preventing wider institutional adoption?
I also come from a traditional finance background, started my life in banking. I think a lot of people at BitGo have come from that institutional world. Look, I think that the first thing that's been really blocking institutional adoption is regulatory clarity. I started at BitGo 4 years ago. The sort of regulatory framework globally was extremely fragmented. MiCA hadn't come into Europe, so we had a couple of pockets of countries that had relatively robust regulatory rails. Germany was one of those. Switzerland was another one. The US was still debating what to do about crypto, which became very much a political issue. And then we saw little pockets of other countries globally. The UAE was one of the most proactive regions in terms of putting their stall out, coming out with very clear regulatory rails, led by ADGM, also followed by VARA. And Bahrain was also at the forefront of making it very clear and having very clear regulatory guidelines on what people could do in the crypto space. So that has always been the blocker. It's become a lot better in recent times. Certainly in the US, they've got their act together. They've come out with very clear regulatory rails, which they're still trying to improve. We're seeing a lot of companies that were based offshore moving back to the US because of that. And we're seeing the large institutions coming into the space. Names like BlackRock, names like Fidelity. We're talking about the biggest names in finance now that actually have the confidence and the ability now to move into the space, which we didn't have a few years ago. And the second thing, really, so obviously the regulatory clarity, counterparty risk as well. I think that's been a big concern for institutions coming into the space. I think we all know the FTX story. Market leader, obviously a lot of people had money tied up into that business. Obviously did some bad things, went under. A lot of people had money blocked, lost. Only recently received some payouts from that. And I personally feel that really delayed full institutional adoption by a year or two when that came out. It removed a lot of confidence from the industry. But custodians like BitGo and a lot of our peers adapted to that and started offering products like off-exchange settlement solutions, which allowed customers to store their assets securely with a regulated custodian, but actually deploy those assets to external exchanges for trading purposes. And that kind of removed that counterparty risk and sort of endeared a lot of confidence in the institutions to be able to move into the space.
Okay, thank you so much. And again, Burak, just in my mind, which assets, what do you think that, which assets classes will be tokenized at the next 5 years maybe?
Actually, with the tokenization, sky is the limit. There is no limits, obviously, but as in the banking years, we will start with the boring stuff, like guaranteed yield, like bonds, etc. It will be the case.
They will be tokenized immediately.
Yes,
so, okay.
those will be, those borings will be, because everyone will be feeling secure with those stuff. None of the investors will come to you and give me a token. They ask for yields, etc. So first, they want to be in a secure location. So that's why the boring stuff will come first. But apart from that, I see the upside, especially in the tokenization of receivables and payments. So the trade finance will be coming to a good position, and it will be booming, especially in the countries like Turkey, all the emerging markets around. It will be a booming.
So it will also affect, from your perspective, the factoring services and so on,
At
and the insurance services as well for trade finance.
At one point, because at the end of the day, everything will be securely stored in a programmable ledger, which is secure, more secure than what we are doing with the banks, maybe for the time being.
I'm just curious about, what do you think property?
Property is going well, especially with the Dubai case. It will be, it should be in a better place, just avoiding these times of the year. But I see that there are many big companies focusing on the property portfolio tokenizations in the EU, in the UK, in the US, but just waiting for the right time regarding the regulation.
Okay.
For Turkey, it's up to regulator
Regulation, yeah, I think so. And my last question will be both of you, actually. If I were in just like a traditional investor and wanted to enter this world, the digital assets world, what would be the first thing I should focus on? What do you think?
Yeah, it's custody. It's wallets. Probably the most unexciting part of crypto, but the most necessary. It's very easy to go out and buy Bitcoin or whatever other asset type. There's plenty of trading venues to do that. But if you don't have a very secure solution to store those assets, you're exposing yourself to extreme risk. So, yeah, if I was moving into the space, I would make sure I lock down my custody solution. You've got a couple of options. You either work with a company like BitGo or one of our competitors and outsource that, or you build it in-house. But I can tell you right now, building a solution in-house takes a lot of work, a lot of internal knowledge, and a lot of staffing to ensure it runs smoothly. So I personally think outsourcing it to start your business, and maybe longer term you could look at building your own internal solution.
Okay, thank you. You, Burak, what do you think?
Maybe the first question you should not be asking is, what is the yield? As he correctly mentioned, it should be stored in a very proper location. So compliance is the first key.
Okay.
If it's a regulated entity who is taking care of your assets, this is one thing. Compliance was a bottleneck at some point in many regulations, but today I see that it's a necessity. The second thing is, on top of what Nick said, who's the who's the ultimate responsible? If in case of a fail, where will you go and ask for your stuff? Other than that, yes, it should be secured in a custodian properly.
So custody and the regulations and related to that, it's the main role, it's having the main role in this digital assets and crypto industry as far as I understand.
Yeah, I mean, the way we look at it, it's like a pyramid. Obviously, the regulation is the first, the foundation level. And then custody and wallets is kind of on the base. And then all the other products are stacked on top of that. Trading, staking, financing is another part of our business, which you touched on. People want their assets to be put to work. They don't want to just securely sit on it. They want to make sure that they can create yield or some other sort of revenue-generating product. And that's what many of the custody players out there are trying to solve and offer right now.
So, Nick, I'm not sure that you're also operating in Turkey, right?
We are not operating in Turkey right now. We were operating in Turkey. We would love to operate in Turkey, and we're exploring it. Obviously, one of the reasons I'm here, we're exploring how we can enter this market. Obviously, with our business model with BitGo, we set ourselves out as a regulated provider, which means we have to get local licensing, a local team, a local entity set up, which is a fairly costly exercise and takes a lot of time to get in place. But the other option is we've got providers in the market already that are offering a technology solution to banks or large institutions that have their own license already. So we're trying to explore which solution makes the most sense for us at this moment.
So as a final word, how do you see the developments in Turkey regarding custody or crypto industry?
From my point of view, it's very straightforward. Today, it's an independent topic that we're talking, even we are having this session on custodians. But in 5 years, it will be just a regular department or a regular element like, again, comparing to banking, the internet bank. We have it there. The internet banking or the digital bank was something different at first. Now it's just a very usual element of our life. So I'm not underestimating it, but we will be having it in our, how can I say, DNA, which will be there.
Very soon, I guess.
Yeah.
Not will be take so long, I guess.
Yeah.
Because our community, Turkey, they love crypto, they love digital assets, so it will be very soon from my perspective.
It's a huge market. Like, it's one of the biggest markets in the world for crypto. That's why all of these people are here. I think you now have regulatory clarity in Turkey. There was a lot of debate for a long period of time that sort of evolved and changed. On a fairly regular basis. But now that regulatory clarity is here, you're seeing companies like, I saw Coinbase here, you've got BitGo, the large institutional, international businesses are looking at Turkey very seriously to set up here because of that regulatory clarity. It's very important.
I think the same. Do you want to add something more, or I will close up the session?
Thank you very much.
Thank you for your valuable contributions, and I'm honored to have you in this session. Thank you for listening.
Likewise.
Also.
Thank you.
Thank you.